Tuesday, February 21st. Monday was a holiday, President's Day. So this is the first day of this week, a 4-day week. As you know, I always start out with the S&P 500. And if you have any questions, comments, or anything you want to contact me about, info@ersignals.com. So here we go. We have indeed dropped a bit more in the last couple of weeks than I was expecting originally. But after all, we did get overbought using my custom RSI, which is in the subgraph on the bottom right. And that was the first time we got overbought from relative to way back in August, which produced a huge move down to make a new low until October 13th, of course. Now, I certainly do not expect anything like that whatsoever. In fact, we could be turning around in the last hour or so. I'll get into that in a moment. That's a little bit too premature to really have any confidence in that statement. But look at where we are now. Low 30s, not quite traditionally oversold below 30. My oversold level is significantly lower than that. And it's calculated differently and displayed differently. The RSI, and I learned RSI from Wells Wilder himself. I like, it's my custom. I like it a little bit better than what he had originally. So we're getting close to the buy territory, oversold conditions. We are, in fact, hitting with a low today so far at 200.11. I talked about for the last many days the market possibility if it broke a low last week that it might get down to 200, maybe 199, 198, which is still possible. But 200 has a lot of zeros in it, and it's psychological support and resistance when numbers have a lot of zeros at the end. Don't know why. Psychological. I've seen it happen more times than I can tell you. 52 years in this business, charting all the way through. So we might be trying to turn around. Let's go to the left here a little bit. And we have a little tiny bit of evidence. They're making new highs for about an hour, maybe 45 minutes. Nowhere near good enough. Could easily make lower lows. But again, we have a rock solid. I don't want to get below. I sure as heck don't want to close below 398. So we hit 400.11. Okay, now I need to get really above 2.5, 260 to open an eyebrow or two, make me interested to say something more profoundly that we may have the turn in hand. And that's only 2.5 points or so from the bottom. Getting into new high ground for the day would certainly perk my interest a heck of a lot. Look what we did. We opened lower, we gapped down, we rallied a little bit. Classic rally to close the gap. The little green zone I got way over here, I should have dragged that to the right. It's like that. And it closed the gap almost perfectly and turned around and went right back down, made the low of the days, and now showing a little bit of friendliness, a little bit of strength. Again, nowhere near enough. Making new highs for the day is going to raise a lot of eyebrows. Well, I've seen it happen, but it is highly unlikely we would rally all the way above yesterday's high, all the way up to, let's say, 408. That would be a big surprise. And it would be a huge bullish engulfing. Unfortunately, it would not be an ER buy signal because it didn't get oversold within the allotted period of time. Let's go to the daily charts here. We came down very, very close to my heavy green line in this particular chart, green. It's a different color sometimes in other charts. And that's the neckline. Again, that's why I'm mentioning 398. Don't want to go below the necklines. Ladies and gentlemen, I don't know if you realize this, but this giant head and shoulder, which is working just fine so far, it's just close to a turning point, that's all. Gets a little scary at those points. This head and shoulder bottom, which started in June, had a head and shoulder bottom for its first shoulder because the first shoulder low was actually May 20th. And then the lowest low, which is the head of the formation for the shoulder, June 17th. And then there's the last shoulder low right there. I drew the neckline at the time it happened. I saw it. There was nothing hiding here. And the minimum upside objective was just great. It worked extremely nicely, but got hugely overbought. And then again, that's the August highs. Down to the October 13th low, and that was a head and shoulder bottom in itself. The head of the formation, the big 5-6 month head and shoulder bottom, has another head and shoulder bottom as part of the big one. That's formations inside of formations. And lo and behold, not that I've seen a lot of these, 2 head and shoulders inside of a big one. They're rare, but one where you have 3 head and shoulders for the shoulder, and the head, all of those parts, head and shoulders themselves, is almost unheard of. It's my favorite pattern. I know how to handle these for better or for worse, if they work and don't work, and they don't work sometimes. But this is the last shoulder low here on January 19th from the last shoulder low of the big head and shoulder bottom. That head of the smaller shoulder was December 22nd. And if you want to stretch your imagination a little bit, a couple of these lows in here is probably what you would pick for the last shoulder, first shoulder low of the last. I know this is getting weirdly complicated. The last shoulder on the giant 6-month pattern. So you've got a head and shoulder for the shoulder. You got a head and shoulder for the head. And you can stretch it a little bit and come up with the answer, maybe a head and shoulder for the last shoulder low on the big pattern. Wow. It went right up to the neckline, stalled a little bit, went right through it, came back down slightly, made new highs for the move, and got overbought. I know I'm spending a lot of time on this today, but it's a story I have to tell. I didn't think we were going to come down to 200, 400. We have. When we didn't make new highs on this way up, I got real suspicious. That was the beginning of last week. So here we are again, and going back to the 1-minute chart on the far left, we're starting to fail a little bit, just dipping down. Again, that was nowhere near enough to be really all that interesting so far. So on this dip down, will we make new lows? If not, and the market starts to rally above 401.10, say, that could be a little more interesting, building a bottom. Let's go look at something else. This gets boring. DIA has plenty of time to finish its right shoulder being built. It's very extended to the right. It's there. This pattern has got all the body parts. You got a double bottom for the head of the head and shoulder in the late September 30th date, and of course October 13th, which I remind you was not only a seasonal trade I talked about a couple of months in advance. October lows, and I will again this year, and again probably. But it was a double bottom. So we got a gigantic ER buy signal smack dab at the bottom of the bear market of 2022 and the beginning of what I believe to be the bull market of 2023. Now, in the next few weeks, I would have to say by the end of next month, I'd love to see new highs for multiple months on all the indexes across the board. That would be extremely convincing that the long-term trend has maintained itself on the way up since October. Nothing wrong with the way the DIA is acting. It just looks a little scary when you come down to a bottom or a top. People do not tend to go short or get out of long positions if they are long and a market is going straight up and they're making a lot of money and they're feeling very good about it. But oh my God, that's when it becomes dangerous. That's when it becomes overbought. That's exactly what my trading system, ER reversals, the Ehrlich R reversal signals do. You already know the signal is frequently created at the highest high for many weeks, if not many months prior and after. We're going to see some of them very soon in futures. So nothing wrong here. We didn't make a new low. The 1-minute RSI got down to very low levels of 14. I do watch that if I'm trying to put on a trade as accurately as I can, and I do use 1-minute charts. The QQQ has been holding up better, making more progress, getting stronger, quicker, et cetera, et cetera. And so it is not doing as bad as some of the other indexes, relatively speaking, and is nowhere near its neckline. And this last rally high that got overbought was approximately 50% on the way up to its minimum objective with the big pattern that started in June, of course, and October 13th, and, you know, the end of December, beginning of January. So nothing wrong here. It just doesn't look good. It doesn't feel right. People don't like to buy. And now I'm going to talk about reverse, a market that's falling like a rock, but isn't how they get very oversold, by dropping down a lot, and in particular, very quickly. It's called exhaustion weakness. It comes in scales, long-term, intermediate, short-term, and everything in the middle. So these are the opportunities when you should be putting your buying hat on and looking very, very closely at the way the market moves. And if you can discern for good enough reasons that you should try to put your toe in the water and get into a trade, this is where the risks are lower, your loss would be lower, and your rewards would be higher, but it's gutsy. I know, been there, done that, with some very famous market analysts. Robert Prechter, the LA Weight Theorist, Jake Bernstein, Beatrice Foods Corporation, la, 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 la. Okay, next chart. Sorry about that. Okay, so that's it for the indexes. Futures. Spent a lot of time on that today. Don't do that to me. Okay, first one, corn. Not yet breaking out above this major bear trend line, which is probably the top of a big pennant formation. I just don't have the line drawn across the bottoms at the moment, but you can imagine where it is. We cross this line on a closing basis, and in particular, get above 690, let's say, on a closing basis. We should have a major upside breakout for a major move up that will last a long time. That's a big, big pattern you're looking at. And you'd be making new highs for 10 months or something? Yeah, that's about right. Next chart. And I think it's going to happen soon. Now, as these charts, 10-year notes and bonds go down and make new lows, interest rates tend to be going higher, or the perception that's going to go higher, etc., exists, because it's reflected in the down move in the 10-year note chart and the 30-year long bond chart. So we have new lows and what looks like a new low close finally since November, and getting closer to the lowest low for the whole move. Now we could form a double bottom, but come on, we're already very oversold. Anytime I expect this thing to turn around, and assuming I'm right this week, that's going to help the stock market reinforce its bullishness, and I would expect that the stock market would start to rally. Again, it depends upon this chart starting to go up again. If this chart, 10-year notes and bonds, go up, rates go down. Stock market likes lower rates. Obviously, we just lived through a whole historic series of 3/4 point moves. All right, so that correlates. They fit. Right now, they haven't turned yet, but I think they are super close. Next chart, 30-year long bond, making just barely a new low for the same few months since November. It's very oversold also. So what you're going to end up with here is maybe a little double bottom and a nice shelf of support. And the lowest low was still back in October, November, when the marketplace, well, with this chart, began to feel out that the high in interest rates was near, a few months away. Next chart. So I'm turning bullish on interest rate futures. Not quite yet, but super close. All right, this is the E-mini. Now, because it has different trading hours, the neckline is different on this, and I am not concerned that because it's below this particular line, it's failing its head and shoulder bottom. I think that this line actually should be down right about here, which matches the little double top at 400 and 400.49 back in December for the spider. That puts us exactly where we are, with the S&P SPY slightly above its neckline, which is where we are. Look, we're 400.35 right now, tick for tick on this spider in the upper left-hand corner. Now, so I think it's still okay. Next, we've got cotton. Yeah, this one snuck in here. I really wasn't going to talk about this. Not much happening at all. It got oversold. Now it's popping back up again, exactly what you would expect. It probably will come back up to 87 to maybe 89. Boring, sideways, dull. Hey, we caught a great turn here. And let me remind you, if you were looking at this chart on the day it turned green, which is July 15th, it would be going straight down, except for maybe later in the day when it closed higher. It would be looking like very bad, very bearish the previous day when it just first got oversold again. And it had reached a minimum downside objective on a head and shoulder top. So I do have something to say about cotton, although it's a little old. But psychologically, put yourself in the position you would have been in July 15th. Looks like it's going lower. It's going down fast. I don't see anything stopping it. Wow, it could drop a chunk more. But bullish engulfing by the end of the day is exactly what it did. And the ER buy signal lasted for months. Fantastic. Nice bull move. They don't always work exactly like you expect. And please, don't assume this signal back here on October 21st actually lost money. Yes, it probably did a little bit. But there are opportunities in here on a daily chart you don't see because the trades are executed on 1 minute charts, not executed on a daily data chart. We look for exacting entry and exit points, and you need a 1 minute chart to do that. Okay, next chart. Live cattle. I think I should have gone back. I think I ended. That's right. I got as far as I wanted to go. So thank you very much. Profitable trading to you. See you tomorrow. Maybe the market will turn by then.